Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday, and we're sitting here now at the 27th of July, 2021, about 6:10 in the evening. It's going to be difficult to trade the financial markets tomorrow. Why? Because you're walking into an unknown. And when you're walking into an unknown, especially in the futures markets, you just have to understand if the Fed throws something different that you're not ready for, the market goes zooming in a different direction. So we're looking to see a couple of things. What does the Fed think of inflation? Is the Fed going to begin tapering? If they do, when? And what instruments will they use to taper with? And the third thing, what do they think of COVID? That's really what we're going to be hearing about in this. I happen to think the Fed is talking about tapering. However, talking about it and releasing the plan, no. I think they'll talk about it, they'll do planning for it, and they need to get the COVID more under control. I don't think the Fed's worried about inflation. I think they'll use the word transitory again. I think there's help wanted signs everywhere. You can't fill those jobs. We've got half of America that isn't vaccinated, and we're watching hospitals in those areas fill up, and this COVID move through that. Is it as bad as it was last time? No. Wells Fargo wrote their clientele today, because I happened to read an article where they were quoted in it that they don't see it being as bad as the first part. I don't know. It's pretty early in this, and we just don't know what this variant is going to do completely. It's still a summer month. People are outside. As we get past August into the September-October period, that's when I think we've been all warned, be careful. Not sure what's going to be there. As we take a look at the S&P, for the week so far, it's down 1/3 of a percentage point, 14.5 points, certainly not much. When you look at a daily bar chart, the market's in a stall pattern in front of the Fed. You've got a pattern now of a lower low, a higher high, and that was a rather dramatic move that just came out of left field. If the market breaks, I'm going to repeat, I think the market will find support regardless in that 18-day average of closes. Let's call it 43.53. You haven't stayed under it very long. If the market goes up, the Bollinger Band could be the problem for the market, and that number is 44.2775 because it shows that each time you hit it, it has a very difficult time staying over it. It can push it up, but it doesn't just generally pop over it. It could. You never know what the Fed's going to say. As for the momentum, well, you can't count tonight because we don't know where the market's going to finish tomorrow. But you can count Tuesday's close. And both numbers that make up the slow stochastic indicator are over 80. On Monday, they were not over 80. Therefore, both of them. Therefore, the market's simply overbought. No more than that. Can't magically tomorrow change that pattern on you, so we have to wait and see. In the NASDAQ, in a very similar pattern to the S&P, you have a lower low, higher high, went up to the upper Bollinger Band, got hit, fell back to the 18-day average. You didn't quite do that yet in the S&P 500 index. In the Dow, the pattern's different. You have higher lows, higher highs. The market is overbought. You can't count today's readings because we don't know how Wednesday's going to finish. But if we go to Tuesday, both numbers over 80. And, come on, give me Monday. Come on, there you go. They're both not on Monday over 80. So again, just like the S&P, you're overbought in this market. Last, the Russell's still in a bear pattern. You've got the pattern of lower high. No, you don't. You got a lower low and a higher high. I even said this yesterday and didn't catch it, but I see it today. You have no pattern. You had been in a downtrend. When you crossed this high, you came out of it. I wonder to see if anybody even write me on that and say it. Not one person did. The resistance where I thought it would be, the combination of the 18 and the 100-day average on a bearish crossover. I'm surprised the market hasn't gone for a new low. Often when you get bearish crossovers of moving averages, it means you're going to make a new low or high for that particular move. Now, I guess we could say that since it's made the lower lows than each of these, and that is something that can qualify for that. In the VIX cash, all right. Normally I tell you that I think the pros will sell the calls up here, looking to get back into these moving averages, or sell a put down here, looking to get up, but not in front of the FOMC on the day of a statement. I don't know what they'll do. I'll look at it come Thursday, not tomorrow, I can promise you. When I take a look at the 30-year bond, still bullish. You've got the pattern of higher lows. You do have lower highs, so you've gone into a stall, and I think you see that very clearly here. If the market breaks, it's really got to get back under these lows to turn the trend back down. We'll see if it can do that. If it clears 165.12, I see nothing to stop it other than the Bollinger Band up nearly a full point higher at 166.10. In the 10-year note, you have the pattern of higher lows, higher highs. Different than we saw in the other market? No, not really. Let me just show you. This is a stall pattern. You do have the higher lows, but now you got the lower highs. Again, if you take out 134.19, I think the market might just challenge right on up to the upper Bollinger Band. To be bearish, you got to take out this break low and then close under the 18-day average of closes. In the dollar index, the market's caught in what I call the psychiatry trade. It means you go up to the upper Bollinger Band, you keep rooting. I heard one of our people doing that just when I was on vacation. Oh, this dollar's breaking out, it's going to keep going. Not my staff, part of another staff that we're with, and I'm going, I don't think that's the case. And it fell right back. Am I overly bearish? No, I think it'll find support at 92.13. I think you're caught in that psychiatry move where you don't go up, you don't go down, you wear yourself out. It's consolidating, building momentum. Euro's the flip-flop of the dollar. You couldn't break out to the downside, so you're getting a pop. Do I think it's going anywhere? Not really. I think the 118.85 level is going to be a problem for it. The British pound is in an uptrend. Higher lows, higher highs, lots of resistance from 139.25 to 40. Very overbought, very difficult market to get a handle on. Bitcoin's doing a nice job here. It's continuing with the higher lows, higher highs. It's very overbought. But folks, this is a market back to 39,000. Even though Amazon came out and said, no, we're not saying we're taking Bitcoins or these others for our goods. Where there's smoke, there's fire. They're looking to hire somebody with crypto experience, so I don't know what it means. In the differential between Brent and WTI, well, you know this market's going to have all eyes on the Fed. Is that going to be bullish the economy, bearish the economy? What's it going to do? The market has re-entered an upside phase. It's got higher lows, higher highs, but it did so getting itself into overbought territory. That's hard to play once you get overbought. The WTI is not as bullish as the Brent, and you see that right here, how that's acting that way, and this chart is still pointing down. To negate the bearishness here, you've got to get over 72.43. Right now, the pros, I think, are defending their short positions by selling at 71.75 with stops over that number. In the Rebob gasoline, this is still the SEP contract. It's up and away. You can see where you're at. I read that in the airlines, they're telling pilots to fly slower. I don't know if you saw that. I know I ran into that situation when we were trying to land a private jet in Montana, and we couldn't get fuel at one of the airports. Well, we had heard it's because of the fires. Now I'm hearing that it's a mixture of the fires and that there is a fuel shortage around the country, so they need to get more fuel. You put it together, it all makes sense. Another thing that I try to make sense for you is give you trading ideas. Besides that, what about a trading technique? I don't just make up what I'm doing. Like I said, I've got 50 years of experience doing this. If somebody's done something wrong, I probably lead the parade with it. But I'm going to teach you 5 steps. Starts with swing lines. You're going to move to moving averages, momentum index called slow stochastics, my old friend, the Bollinger Bands. And markets don't always hit a Bollinger Band, be it upside or downside. There's another pattern, and I talk about it regularly here, called window envelopes. Those are the 5 things I use. Now, it's how you use them, how you put them together, the little parts that you learn from it. My course is 54 videos, 8 hours long approximately. With the course comes my full research, the morning subscriber videos. I want you to see them. If you're a recurrent subscriber, that's obviously you're getting it already. But if not, you're going to get that while you're taking the course. And the charting software you can find out what I'm doing, how I'm doing it. You see what I did. You do the same thing with the data we give you, the older data. Then I bring you in the morning to the new data. I keep instilling what you're learning. You can find out more by going to our website, go under the word education, everything is listed there, and teach yourself something. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.